The EU, in drafting this financial transactions tax, has taken a very aggressive position about who is subject to the tax. And so one thing that is clear from their view of this tax is that by simply transacting with an EU country that is subject to the tax, the counterparty is itself subject to a tax. And we can compare this with how sales taxes work in this country in the U.S. The financial transactions tax looks a lot like a sales tax, but when someone who's, say, in Virginia, where I'm from, buys an asset from someone who's in Seattle, where Amazon.com is from, we usually think, well, that's not subject to tax, because unless Amazon has a physical presence in Virginia, they have brick and mortar stores, Virginia itself doesn't have enough of a claim to that transaction to be able to assert taxation against Amazon. They can assert taxation against me because I'm their resident, but they don't have enough ability to assert taxation against Amazon. The EU, in this parallel context, they view themselves as having the ability to assert this tax against people who transact with their own financial institutions. So a U.S. bank, there's actually an example in their recent agreement that uses a Swiss bank, and so in their view, if a Swiss bank transacts with a French bank, Switzerland is not a member of the EU, that the Swiss bank is nevertheless subject to the financial transactions tax.